Hello everybody, welcome to TraderMerlin Show. It is your Friday edition. It's happy Friday, everybody. Wow, I'm not sure what just went on there. That was kind of interesting. I got a nice little echo and reverb. Fantastic. Hello everybody, welcome to TraderMerlin Show. It is your Friday edition. Somewhere. It's happy Friday, everybody. Hold on a second. Wow, I'm not sure what just went on. Larry, is that you looping? I got a nice little echo and reverb. Fantastic. Hello everybody. All right. Bizarreness. It's Friday. I think it was okay. I'm good. Anyway, this is maybe it's the whiskey talking. I'm hearing voices in my head. I'm hearing stuff going on the side screen. Happy Friday, everybody. It is I guess the first official Friday of 2024. So cheers to all of you out there, and thank Carrie for the Rubicon Rye whiskey today. That's what's twirling in my glass over here. And I apologize if you hear mariachi music and ay and screaming and whistling. They're doing the stucco about 6 feet from my studio window. Kind of weird the way it's going out. Yeah, I know, right, Mark? It's been a weird start to my 2024. Man, whatever. I'm jumping in the future. Okay, let's continue on with the theme for this week and for next, which is Market Outlook 2024. I'm trying my best to bring you different perspectives so you don't get tainted by my view, my biases, whatever they may be. I'd rather you kind of formulate your opinions based off of your assessments of the markets, and sometimes we don't see all the information correctly, or we may not just be aware of things that are going on. So why not bring on more and more and more traders that are actively engaged in these markets, see what their perspectives are. Now, my guest that's on the program today is no stranger to any of you. He is a regular on the program. I've worked with him for many years. Good friend of mine. We're talking with Dr. Larry Jacobson today with his 2024 Market Outlook. How you doing, Larry?
I'm doing great, Merlin. I'm just going to put on my camera to say hi to everybody. Hey, everybody. Good to be here with you. Happy 2024.
Yes, it's been pretty good. So other than the colossal screw-ups on the show to start off, I've had a couple pretty good mistakes so far this year. I feel like maybe it's my brain going out of me, but I'm going to keep on pushing through, buddy. We can do it.
We can do it. We can do it.
Did you make any New Year's resolutions?
I'm breathing every morning. I guess that's a good start.
That's a good one.
Yeah, no, it's just more of the same. I just want to continue to keep doing what I've been doing, finding great opportunities. I'm not somebody who sits there and tries to guess the market. I'm just going to watch what the market does, and it will tell me exactly what I should be considering doing by just reading the charts.
Keep it simple, right? The old KISS methodology. I know everybody believes in that one. Because we talked about New Year's resolutions, I'm going to bring this one up here just so everybody can see it. This is for the month of January. I know some of you have asked to be put on this list, so I did put you on here. I'm doing 30 burpees a day, plus, this is a weird one, I know, I'm adding one piece of fruit per day. I don't eat a lot of fruit, and I need to eat more. So I had that Jimmy T's doing 15 hanging sit-ups. Margaret's getting her nails done only once a month. Apparently, Margaret, you have an obsession with getting your nails done, I see. Carrie wants to run 12 miles a week. Tom's going to go to the gym, and do 5 minutes of squats, which doesn't sound like much. That's brutal, I'm telling you. And Les, he's going to do an additional hour of trading education each day, including those XLTs, walk at least 5 miles, and most importantly, Les, going to spend some time with the wife, or more time, if that's possible. All right. If you guys want to be on that list of accountability, let me know. Type it in the chat or email me at tradermerlin@gmail.com, and I will put it on the list and remind you periodically that we should be sticking to our, not resolutions, but challenges for the month. So, first question I'm going to go into, Larry, with you is, as we roll into 2024, there are so many people out there that are incredibly bullish. So many that are incredibly bearish, and we could point to thousands of different pieces of information which are guiding this market one way or the other. And my question to you is, what do you see as the biggest challenge for 2024, not just for yourself, but for the markets overall?
It's a great question. In fact, I was going to do that a little bit later on, but why don't I just jump here? I'm going to share a slide deck if I could, Merlin.
Sure.
Give me 1 second just to see where I'm at. This should do it, I hope. Let's see what comes up. It always makes me nervous.
Yeah, you make sure you have the right browsers. It's waiting. It's taking forever over there to go. Ooh, I like it. 2024. So, if this, then what? That was for the podcasters out there. They can't see you, Larry.
Yeah, if you think about it, guys, this is this is kind of going to be my mantra for the year. But what it really comes down to is having a plan. because we can sit there and speculate everything. But the thing is, when something appears, do you have a plan? And in fact, believe it or not, I don't know if you felt it today, Merlin, but we had an earthquake, 4.7 earthquake in Rancho Cucamonga.
I thought that was just the Taco Bell that I ate, but okay.
Well, that could cause quite the explosion too. But at this point, it's a matter of, things are going to happen. What is the plan when it does?
Right.
So give me a second here. I had some slides, but what I want to do is you asked that question. So let me just kind of come in here for a second and get to where I'm at here, which is going to answer those things. And here it is. Let me blow this up for everybody. So here are the top 5 things to pay attention to in 2024. This is my list of things. And notice there's a big red box around this. Why? We've got an election coming up. So everything's kind of off the table until we start to get closer to the election. But these are probably the top 5 things that I'm going to continue to pay attention to. One is continuing to look at indicators in terms of inflation. So we are not out of the woods. I'm going to share some things a little bit with you here. But we got to keep an eye on the fact that, you and I were talking about this the other day, Merlin, that energy's been way down. Yeah. What's going to happen when energy rebounds? Are we going to start to see the interest rates having to be raised again because inflation starts to take off? So I think, to me, it's been funny. There's been the same thing that's happened over and over again, that everybody's trying to call things instead of just trading what they see and not what they think. Mm-hmm. So again, that's probably number one, is what's going to go on. And I'm going to give you guys a little bit of background to my reasoning for this, but that's probably number one, is we still have inflation. The Fed's not done. What's that going to mean in 2024? Number two are all the geopolitical tension things that are out there. You've got the Middle East. We've got Eastern Europe. We've got Asian Pacific region. So when I talk through that, obviously we have the Israeli conflict right now. You still have Ukraine. And there's talk now in 2027 that China's saying we're going into Taiwan.
Yeah.
So what's it going to mean? And then, of course, we have what's going on in the Red Sea. So there's a lot of things happening right now that can create a whole bunch of turmoil into this new year. Number three, what is the Federal Reserve going to do to curb and do better risk management? I mean, we're going to talk about this, but we are probably now at the highest amount of debt we've ever seen in our history. But right now, what I've read, Merlin, you're going to appreciate this. The United States economy can be likened to Greece and Italy in terms of its debt right now. So think about that.
That's wonderful. That's wonderful. Having as someone who has traveled extensively through Greece and Italy and understands kind of the cultures, and no offense to my Italian friends or to my Greece friends, but to say that we're at their level of GDP, oh man, not good.
No, it's not good. And I'm going to show you a couple of slides that I found that really kind of make you think. Then, of course, all the technology going on. What's going to happen with AI, blockchain, cybersecurity? So as you know, you've been talking about it. I'm sure you've been bringing it up on your show. What's going to happen next week? Are we going to see an ETF that comes out of BlackRock? But at this point, it's starting to get a little bit of traction right here. We started to talk about there was a good rally between around 17,000 back up to the 40s. So people had an opportunity to do that. But as far as different sectors, what's going to happen with healthcare, technology, finance in this upcoming year? And finally, just different factors, for example, like climate change. What's going to happen with the seasons this year? We're starting to see highest ever temperatures in summer. They're now predicting the worst winter on the east coast of the U.S. they've had in 2 years. So they're going to be
2 years.
So
long ago.
Well, but understand, for the East Coast to not have kind of calm winters has been a real treat for them. Now, all of a sudden, you're seeing, we haven't even gotten into winter really. We're starting to, and you're seeing all these storms just pounding the East Coast. So when you take these 5 factors and then you throw an election on top of it, I think it's going to be a very interesting year. So if you want, I can just kind of back this up for you, unless you want to go into a second question, I can come back to it. Or you want to
No,
kind
I
of
mean, it's interesting. Normally, we're kind of looking for a specific, like, here's the thing. And I like that you put these 5 points out. And just for the podcasters, you got economic indicators of inflation. Number 2 is global geopolitical tension. You're missing one on there, which I think is something that most people are not talking about at all. And that is Argentina. Argentina elected a new president, and they made it very clear we are getting rid of our central bank, which is something that's unprecedented for a developed country. And I think this one's very interesting because they've also said Bitcoin might be the answer for our country. And that's, I know people going, oh God, here we go with Merlin's crypto talk again. But it's that adoption aspect that if more countries decide to use sound money, which is Bitcoin, you may see a domino effect there. And what is them moving away from a central bank due to their economy? It's one of these kind of beta tests we'll have to keep our eyes on Argentina. While it's not a major economic powerhouse, it does have some influence on the global economy, and it'd be interesting to see how that one pans out. He also has Federal Reserve policy. I'll ask you a question on that one in a minute. Technology and regulatory changes, environmental, social, governance factors. So you're basically, from what I'm gathering from those 5 points, you're going, look, if I were to answer Merlin's question of, what's the biggest challenge of the markets in 2021, it's just maybe the sheer amount of uncertainty with data because there's so many different factors. I don't think you're pinpointing one as being more significant than the other.
No. And I think we're not going to know when it's going to hit, but I think it's going to be a domino effect. And so if you're into it, I'll go back here and share with the listeners real quickly. Let me show you some things that I've come about with. Now, I'm going to start off here. Now, this isn't from today. This is from this weekend. But right now, we're probably at about 135% of GDP. That's unprecedented. We've never had this level of debt ever in the US. So I want you to think about it, that it's like if the United States of America was held to the same standards that we are in terms of credit card debt, these guys would have been shut down a long time ago. I wish we had printers that we could just print money every time we needed to deal with risk management. But we are now kissing up to and probably broke $34 trillion.
Yep.
And again, we now have the largest debt in the world. Okay, so think about that for a moment. So there's only 3 ways to get out of this. Number one, we got to have individuals that want to buy this debt. They want to go in right now and be able, right, to sell to people like us or companies treasury bonds and debt. 2, foreign countries. Are they going to be as aggressive right now in wanting to buy this debt at this point? And finally, the printing of money. So if the United States can't meet its financial obligations in terms of its interest payments, or more importantly, bonds are expiring constantly. They can't pay back the principal. They're going back to the printing press again. Not to mention, we still have this looming debt ceiling crisis, where the issue that people confuse often, it's not really about the Fed. It's about the Treasury and the government deciding how much they want to raise this percentage of GDP debt at this point, right? We're already 35% above 100%. Where's this going to go? And at some point, if they keep raising this, we're going to get to a point we just can't afford to pay it back. So
yeah, it's funny you mentioned that. We hit $34 trillion worth of national debt, which is just crazy. What's even more crazy is the interest on that debt. You can see it on the screen. Normally I'd ask you, but it's right now it's $723 billion in interest we paid on that debt. Can you imagine if we actually just ran our government efficiently and didn't pay interest on our debt, and all of a sudden, we could put that back towards infrastructure, whatever. I should run for politics, but yeah, it's crazy to think they're paying that much just in interest alone on that debt. If this was a business, or if this was your family's budget, all of you would be bankrupt at this point. It's impossible to function if you're a normal human being. But as a government, you just print more money, which is why we're in the problem that we're in. So crazy, and who knows if it comes to a head? Could get even worse.
Well, look down below here. 1960 was only 52% of GDP.
Yeah.
34% in 80. Back around 50 in 2000, and we're at like 135 right now. So what we're seeing here, and if you really want to look at some sad statistics, I'm going to see if it even appears over here. Look at the median home prices. In the year 2000, 23 years ago, the median home was $168,000.
Where's that one at? You got so much data on the screen. I'm actually looking at the real time ones, but
I'm actually circling. Can you see me circling?
oh, okay, I see where you're at. Oh, yeah, so it's over here. Yep.
So right over here, notice we've almost tripled the housing, but look at the median income. This is what's killing us. 32,000 was median income, and now it's only 36,000. How are people surviving when every day they're paying more and more for the things they need to live on?
Yeah.
So I start here just to kind of give a big picture that this is what's got me really freaked. And as we start to go through this, look here. This is now starting to get into Merlin-esque type data, right? You love bringing up things. So
I do. You know what? I like just the official government data. I'm a big fan of official government data, and and especially the stuff that comes out from the Fed, the St. Louis Fed. Do I believe all of it? I kind of have this jaded opinion about it because I believe that it's somewhat candy coated, but they can't candy coat it that much. It's documented how much they're printing money. But here you go. There's your debt to GDP as of December 27th, 122% debt to GDP. That's pretty embarrassing.
Right, and look how it just spiked. After COVID, we got a little bit of a release, but here we go again. And now they're going to have to raise the debt ceiling again, which means this is going to go ahead, right, and keep getting higher at this point. Now, look at this currency in circulation. I know you brought this up. Look at this spike of just printing of money from COVID to where we are today. Now, when you bring this into perspective, and this is what I was referring to, we now, right, we can see right here, it costs about $695 billion to service its debt. That's what you had brought up. But right now, we can see of the global debt being $300. Okay, that is now 45 trillion higher than even what it was prior to COVID. So this is not just a U.S. problem.
Right.
This is a world problem that's happening.
Well, Larry, it all happened. We are the keep up with the Joneses country, right? If the U.S. starts raising rates, people are going to start raising rates. If the U.S. starts cutting, of course, it's dependent on what's going on with their economy. But when they saw that we were doing this stimulus and forcing people to lockdowns and just flooding the markets with money, other countries followed suit as well. So it's no surprise that the total global debt has significantly surged, which. I like that you see here, it says on his screen, it says global debt currently stands at 45 trillion, higher than before the COVID-19 pandemic. I mean, that is, I wish we had the all-time numbers there, but it says 305 trillion of debt is what the total amount of global debt is, and 45 trillion of that happened just after the pandemic. It's just shocking that they put that much money in our markets. Anyway, I'll go on that one.
Yeah, and think about the fact that we keep going back to 1929. This dwarfs the debt that was going on in 29. So this could be much worse. But look at this next picture. I know you'll like this one. Look how we have had all these crises, the timeline of U.S. debt history, and here we are right now. So we have really blown out of proportion the debt that we have at this point in time. And we're even above here where this picture was taken. We're now going on to $34 trillion. And so this is unprecedented in a lot of ways. But what's driving this too? Look at this statistic, right? Total household debt rose to 394 billion in the fourth quarter of 2022. So total household debt's at 16.9 trillion, and look at the increase in credit card balances. That's all we need to look at right now. The fact is people are using credit to survive. And at some point, when they start to default, and people will, that's going to be even more of a problem because it's going to become a trickle effect.
Yeah. So we talked about this with Scott McCormick on I don't even know what show. I think it was Wednesday's show. And you looked at the 11 sectors of the S&P. You go into real estate and energy and utilities and all that stuff, and only 3 of those 11 sectors were up. Number 1 was, of course, technology. Number 2 was communication services. And number 3 was discretionary, which kind of supports that graphic you just had up there, which is just spending. I know some of my audience is in that category as well. Like, hey, I'm going to spend some more money. I'm in full-on lockdown saving mode because that's just the way I operate. But from a trader's perspective, right? You know the statistics look rather dire, particularly with consumer debt. To me, that is a big red flag. How does that incorporate into your decision-making process about I'm going to buy or invest in companies for the near future? Or I know you have a long-term portfolio that your perspective is 3 to 5 years. How does that data play in? Does it make you want to take a step back and wait for this to fall apart and buy at lower prices, or is it still just keep on buying as normal?
Well, again, I'm always looking for pullbacks to the actual right price, intrinsically where it should be at. The difference is, will it get down there faster right now? And
Right.
so what I want to show you here, these next 2 slides really tell a great story, because notice that with every recession, we were in a rally. Look at that. We were rallying into every recession that we had after we saw the uninverting of the yield curve. So look where we're at right now. We've been rallying, and here's the last 5 months right now. But this next slide says everything. We are now down where we were in 1929. So in this little area right over here, notice that all the major recessions that happened because we got into these lower areas. So here we can look back in my lifetime. I can see here was the tech bubble. There's the housing bubble. Here is the COVID crisis. And notice that when we've gone this low, we've had really big corrections. Mm-hmm. So there's a chance right now, and everything is pointing to me that this debt's not going anywhere. We can pretend to ourselves to say things are going to get better, but let's really look at what the news and things are showing. So this again was right here on December 27th. Wall Street banks want to forget about 23, but 2024 may not be much better. So we are now inverted on the yield curve. We are back again, pushing toward highs. And like you said, there weren't very many sectors that were beating the S&P. So what I want to show everybody is, let's do a little history lesson, Merlin. You and I love doing this, right?
Do we?
So here we are going back to the last crash. Look at March 3rd of 2006, inverted yield curve in a rally. When we got to May of 23, the yield curve went flat, still near highs. And then by the time of the crash, we were still rallying and it uninverted. That's what I'm concerned with. What's going to happen again when the bonds dynamic curve uninverts? And here's where we stand today. So here we were in July, inverted. We have still been very inverted. We are still at the top here. We haven't seen the reaction. But if you look down here below, we can now buy CDs for 3 or 6 months for more interest than we would going out 20 years on a long-term bond. Why would anybody right now want to give their money to the government for 20 years where I can give the money for 6 months, 3 months, 1 year, 2 year, and make more return? Mm-hmm. So we're still seeing this happening. And we had a nice little bounce back on the 20 year, but we're bouncing right back into supply. So my outlook right now is I am very cautious to say, if we make new highs, is that just teasing? And will it be a bull trap? And will we see price actually go lower? Because all the news right now is saying the same thing. Yep. And every day, I think you would agree, right? One day, it's looking like sunshine again. Next day, not so bad. 9-day winning streak broken. Well, if nobody's selling, of course you're going to have winning streaks, right? So I'm just very cautious right now that I'm not in the predicting business. I want to see one of two things are going to happen. And I'll bring up a couple of charts, which is going to support this. But right now, what we have to understand is that this is setting up these pictures exactly the way it did in the year 2007. And we're already seeing price going lower. So let me come in here real quickly.
Well, before you jump off, let me ask you a couple questions. Yes, the picture does look similar to 2007. However, it's a very different market bubble that's been created. Back then, it was, predominantly the housing market, over leveraging by financial firms. that seems to not be as much of a factor in this market. It seems like we have a little bit of a different situation going on. Tom brings up an interesting point, and I think a lot of people are in the same situation. He goes, the real world looks pretty bad in all these slides, but ticker world, aka the markets, is at all-time highs. You know, shaking my head, it kind of doesn't make sense. So I guess my question to you is, when we look at all this data, which I'm in your camp as well, I believe that looking across the board, the vast majority of it does not look very good. I don't like the GDP numbers. The only number that looks great to me right now is the unemployment number. That number looks absolutely fantastic compared to historical norms. But you know, this inverted yield curve, which historically it's irrefutable that when we have it inverted this long, recessions are most likely going to happen, and we still haven't seen that happen yet. You have, well, we could talk about the dollar, but GDP, inflation numbers, you know, inflation got really high. I think it's totally manipulated because of energy. You know, all the data, most of the data seems to be very, very bad, yet the market is shrugging it all off and continues to rally. So, you know, is this...
So I brought up a chart. I don't know if the chart's seen right now.
It is now.
Look at the chart, okay? When it comes up, look at this chart and tell me where you've seen selling over the last several weeks.
Yeah, of course. Right at the top.
So here's the thing again. Look what happened. We're retesting the highs of January 2022, and here we go. So we just gapped down right here. And like I said, I'm not in the predicting business. My point in this, if it right, what's the plan? What are people going to do? Right. And how are they going to manage carefully? If this continues and goes into a downtrend here, then we may come back and retest these lows here at 420, which is a big drop here of 60 points on the S&P right now. And there's nothing to really stop this from coming back down to where we saw the buyers that took it up right here going back into 23. Remember, this was the 28% drop, and now we see a little bit of a rally here.
A little bit? It's a hell of a rally, my friend.
Yeah, but here's the deal. You know, this is where I always will look at it. We went down 28%, right? We're down 28% right now, okay? We haven't come back yet.
Well, we have. Okay? We have. What are you talking about? We sold off. If you go to those highs from 2022 to the lows of 2022, that was a massive sell-off, but we've recouped that. I mean, it's just slightly off those highs.
Well, but again, most people in the retirement accounts haven't recouped what they lost
yet. Yep.
Price never went above, right? So you're still behind. It's recouping. What happens if all of a sudden this is that last opportunity to kind of get your affairs settled, have a plan here before it might start to come lower again, or it will go up? My point in all this is I live in a world of having a plan for any type of situation right now. So we saw this come back, but there's been no resistance back to this high at all since looking at October.
Yeah.
So where are the sellers? Here they are. They're starting to finally appear again. We don't know what's going to happen. So at this point, regardless, when we're making this money back over the last several years, guys, don't think you're making dollar for dollar. You're not. You lost $22, and you've been recouping $23, $24, which are going to have less buying power than the 2022 that you did. So I'm not being kind of a negative person here. I'm just being cautious to see what's going on. Now, let's kind of take a look at Tesla, and you'll see that it was a great trade last week with Tesla. If I go to the daily chart here, this was great. I caught this entire move, and now we're coming back to retest demand here. But this was a beautiful move down, nice move here. And look what happened in real estate today. Did anybody catch this? We went into a what trend today on real estate?
Yeah.
On the daily chart. We're in a downtrend.
It's funny. Okay? I have the same line drawn. It's pretty funny.
Right back this drop-based drop. So this is going to be that next area here. So again, we just got to be careful. And I'm not going to jump ahead and say with conviction one way or another until I get more data. The market is kind of recovering into the new year. I want to see what this market has the ability to do. And remember, we're coming up to a debt ceiling crisis issue. We got elections coming up. So who knows
Let's be honest, Larry. There is no ceiling for debt. We need to just change that term altogether because there is no. It's like the debt ceiling is like you're taking off from an airport in an airplane. Like, oh, I can't go above that ceiling of clouds up there, and you hit it and just goes right on through it. It's it's terrible. It's ridiculous.
So at this point, though, understand that we now have seen this downtrend here. The SPY will be interesting. Let's just go back and look at it on a daily chart.
Yep. We broke it yesterday.
What do we see? Okay, here we go. So this looks like the letter M, doesn't it? Right? So we're starting to see, and notice how it came back up to here, failed to go up, and now we're pulling back down. So it's going to be interesting to see what happens right now, and what could happen in the next couple of weeks.
Well, so in all of that, you've covered a bajillion different things. The first one is kind of what's your biggest concern, and it sounds like all of it's a concern to you, and kind of deciphering how this markets are performing, what the information that it's giving you, and react to that. The second part would be, when you take a step back and apply what you know, what you've observed, and your opinions, and we know opinions can get you in some serious crap in financial markets. What do you think is going to be kind of the best performing and worst performing segments of the market? Do you have any areas you go, I think this one's going to do fairly well, and why?
Well, again, I go with consumer discretionary right now because I think we'll see more and more people having to pay for things they absolutely need. I don't see luxury items at this point in time taking off. Mm-hmm. The other thing that I might see here is we still need energy. So the question is what's going to happen with oil as we start to see energy kind of turn around. Technology is an interesting one, right? Because we're starting to see that sell-off. So is this just profit taking, or are we going to see a resurgence when it comes to AI and other things that have been going on? But It's interesting. So to me, will it be a typical sector rotation where utilities, healthcare, usually when they get into these type of scenarios, I like to go with things that I know people will need. People need healthcare. People need to eat. People need gas for their cars. So those three things are probably, when I start to see this happen, people are going to put more money into those things right now. And I see a lot of the more luxury type of things falling off the page. So again,
which would be discretionary, right? Just, having said that, discretionary is the stuff that you don't necessarily need. And, I'm looking at it, if that's the case and you feel like there might be, less spending on stuff just because they don't have much more money, credit cards are getting maxed out, we get the highest level of consumer debt we've ever had, it would seem to me that consumer discretionary might be one that suffers. And if that's the case, then maybe consumer staples do well. Because
I'm sorry, I meant to say staples. I don't know why I said discretionary.
Yeah.
Correct. Discretionary, I think, is going to take a hit. The staples, I think, are going to do well. So to me, it's usually staples, healthcare, and I'm going to be watching energy.
Yeah.
But those two, healthcare especially, and I think you're going to see some alternate energy type of things coming out too. We're seeing more and more things being pushed. It's going to be an interesting year. But again, I like to just look at the charts. I don't like to try to guess right now. The chart will tell me what it wants to do. I just have to be smart enough to trust it. And worst case, if I do puts here, which I have, by the way, and I did a put when it was coming down to here the other day. So I have it going out to the 19th right now, January 19th. It's already up like 70% on this drop that's happened here. So you see, it's all kind of relative to what's going on. Now, we're still technically, right, in this uptrend here. But if we break this now, no longer in that uptrend, right? Unless we're going to use more major swings at this point. So it depends to me on how people are trading. More importantly, what their risk tolerance is going to be. And why not take shots at this and have a tight stop above? See, I'm not really afraid to take a shot at it because I've seen this before. I saw this in 2007. I've seen this again in where recently. We had this same picture in 2022 in January, and it started off very small here and then reversed and actually dropped. So we might get a little rally back up into it about here, but then it could go lower again. So those are the kind of things that I'm just kind of looking at right now. But I'm definitely open, being an option trader, that I don't care. The market goes down or sideways because I'm going to trade it.
All right, fine. Okay, fine. Trying to put you on the spot. I'm trying to get you to commit to some damn numbers. He's a commitment phobic over there. Let me go to the last one, and then we can kind of go whatever viewers want to talk about, any questions you guys may have. As you know, Larry, I do a thing every January, which I will stop this. The cutoff is next Friday, but your number is going to have to be in today, which is I like to I'm with you. The market's going to give me what it gives me, and I have to act on that. But deep down, as someone involved in the financial markets, I know that you're thinking, I think the market's going to do this year. I know deep down you have that in your head, and you go, okay, this is my prognosis. I do a thing every year where I ask people to forecast what they think the market with the SPX will be at on the final trading day of the year. The winner gets 2 amazing TraderMerlin shot glasses sent to me by Michael Gong. Thank you, Michael, for those. I appreciate it. I will give 2 of those to the winner. But what is your forecast? If I had to put a gun to your head, which is such a graphic saying, if I had to force you, what would you say the SPX would be at by the end of the year?
I'm gonna put myself out there and say I think we're gonna be around, and I'll just have to move this out there, 45.70.
45.70, huh?
Yep.
I thought I had it up here. Let me go to 1 second. I'm going to see if I can bring it and put it on the screen. All right, so I have your name on there. Hold on, I'm opening up. 45.70, you said?
Yep.
So you believe?
If you're doing the SPY,
SPX.
So if you have SPX.
All right, so you think the market's going to fall 4.17% by the end of next year? Okay, cool. You were in the minority out of 56 people that are doing this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 people are betting the markets or anticipating the market's going to be negative.
So I'll be your contrarian.
No, it's okay. There is no right or wrong. You know that. I mean,
like I said, I also look at this where you see that interesting fake breakout bull trap here.
Hold on, let me get. Right? I don't have it up there. Let me bring it up.
Go back 5.
There you go. Got it.
My little chart back up. Notice how we came up here and prices pulled back. That usually indicates we're going to see a deeper pullback here. So I'm just interested right now. There wasn't this strong rally above here, right? Yeah. We're right back in here right now,
right.
And I can be completely wrong. But that's the beauty of trading, isn't it? That I can change my thesis anytime I want if I have a plan and I know how much I'm willing to risk and what I'm willing to do.
Yep. Here's a statement that I've never said before, but I just realized how true it is. In trading, a true trader, someone who is active, not an investor, but a true trader is someone where it's okay to be bipolar. You can switch your fingers and go long, go short, like, oh, I'm bullish today, and 5 minutes later, I'm bearish on that one. A true trader is bipolar. There we go. No offense to anybody who suffers from bipolarism. I have a question from Michael. He says, can you ask Larry which companies does he like since he likes that certain sector? Well, not that he likes a specific sector, but what are some of the companies that you like? You've brought a bunch of stocks to my viewers' attention, including Shopify and Live Nation, Ticket Bastard, if you will. You've had Nvidia and many others. What out of your list, what right now sticks out to you is like, man, this one, I like this company, looking pretty good.
Yeah, I'll share that in a minute. What I want to show, if I can, I know you've been sharing some results, so I'll share my kind of value portfolio you and I talk about all the time. So again, guys, it's for educational purposes only, but here, give me 1 second. I actually put a slide together. There we go. So this was 2023. So a couple things to point out. Number one, I tend to hold these a minimum of 3 years. I don't know if you can see it yet.
Yeah, we got it. Yep.
Okay, 3 years. So I'm going to pretty much be holding on to these until about 2025, 26. So C part, I'm still not giving up on that one. But the ones that worked really well. Look at Lululemon. And what I kicked myself about way back when I was talking Nvidia, and I've shared this one with you before, I wish I'd pulled the trigger at $60 on Lululemon. Everything was there for that to explode. You had a new chairman. They basically let go of the founder of Lululemon, and he came in and made all the right decisions. And the stock went from $60 probably around 2014 up here now to $500. So when you look at it, when it's really doing right, notice you have a 74% rally in Lulu since March. We had 6% here, okay, 16% on TER that I've been liking. And Texas Roadhouse from October is already up almost 30%. That's in 2 months. So when you find the right one, it's great. So overall P&L for the year, it made 26%. That's where it closed at for the year. S&P did 24%. So right now, each one of these, we presume we're buying 100 shares, $20,000, with a winning percentage this year of 56%. So in all matters, good year right now, even though 4 of them are not where they need to be. But again, when you're doing a value investing play, you've got to give it time for it to work out. There are going to be some that are just never going to do well. Yeah. And that's okay as long as the other ones do. Now, NetTease was the gift we gave last year at Christmas. Remember that?
Yeah.
Merlin?
Yeah.
And here we are. It's up 35% since last year. So this one actually went up $24.25 per share. So I'm glad that Michael asked that question. So I'm going to share something that I've been studying yet. Okay, that this is my newest one that I'm bringing to the group. I always like to come with a gift.
You got to do it right at the end when I got to wrap up. Okay, that's fine.
Come on, let's do
it, buddy. Okay, let's do it. What are you talking?
Very quick. Hold on, I told you we were going to do this, but here we go. So here's the one I like. PAYC. Pay. Okay, so here it is. All right, not that one. One sec here. A sec to bring this up, and then let's take a look at it. So here it is. Paychecks. Okay. Boom. Paycom software. Paycom software. And this is the zone I'm looking at. Now, why is this one on my radar? Okay, as I always do, we'll do this pretty quickly. I start looking at the fundamentals of the companies and the numbers. So let's go in like we normally do to Yahoo Finance. We'll take a look at things. And as you'll see, that what I'm always looking for, does this company have good cash flow? That's important. Hold on a second. It's giving me a little wait sign here to load. And so this is one I want to do while I'm waiting here with FinViz. I don't know why these things are slowing down. It could be camera. Let me turn off my camera for a second.
Yeah, no problem. It's the dial-up modem you've got.
Yeah, you know. It's the AOL account I still use. There we go. I hope this thing will come up now. There we go. See how quickly it comes up when I take that off?
Yep.
So here's the company. So what I like to do, obviously I do a lot more than just this. And some of you are in Bashir's value investing class. And I think this is very, very important that class is going to give great opportunities this year if we do see some pullbacks. What is going on here? Come on. Sorry, guys. There we go. So let's do this one more time. PayC. So I'm going to go to the financials. Let's just take a look. There's a quick picture that I always like to look at for the purposes of bringing it up to here to show your group. Under financials right now, and we usually look at balance sheet. I hate the income statement, but let's look at the balance sheet real quickly. Isn't this a typical picture, Merlin, that we tend to see? Let me let it load here. Every time we go take a look at one of these type of trades, but we see
one second, I gotta let me throw in some laughter for you, Larry. Margaret says, does he really use Yahoo Finance only? It's not the only one, but it's just, it's all reported. Remember, Yahoo Finance is simply reporting all the documents that have been filed with the SEC. So it's a straight pass through. It's not like Yahoo is creating their own proprietary data analytics. So data's data. But that's so funny.
To give you guys on this show a quick snapshot. Look at the last 4 years of revenue and earnings, right? This is what I want to see. Look at the growth of this company year over year since the year 2019 through a COVID crisis and through things that have been going on. Exactly what I want to see here. The next thing real quickly is how they're doing on cash. So I quickly can show everybody here. So there's a lot more than I do than just this, guys. I'm just giving you a quick snapshot of fundamentals so you can see here. Look at the operational flow in an uptrend. Okay, here we are. Look at this. So operating cash flow has been up. When I look at free cash flow, that's also been up year over year, including into this year. So everything that starts my analysis is why would I like this? is that I'm seeing right now, based on its fundamentals, this company should be trading for a lot cheaper around where it is right now. So what I like right now is to look at this, and there's one of two ways I could play it. I can go long the stock here, and I'm looking at it around 186, 185, and we could see maybe a nice little rally here, especially if it pulls back to this demand area. We started the uptrend, and secondly, you can fill the gap, it might go a little bit higher. But secondly, here is the fact that I could do options. And as you notice here, I can go all the way out to January of 2026, 742 days. So it's like I'm controlling the stock without having to pay for the stock. So I'm just curious right now that if we went out there and let's just look at the 185s, okay, that I could buy one contract to control the same 100 shares for 6,050 versus having to put down $19,715. So I can pay a third of what it would cost. I have 3 years to come up to whether I want to keep owning this stock, or if it gets up to where I believe its fair value is, I'll consider selling it. So that's the one, guys, that's on my radar right now. So what could I do while I'm waiting? I'm selling puts where I'd be willing to buy it. So this way I'm collecting money already while I'm waiting to see it get to a price I'd be interested in owning it for. So that's my first one, Merlin, for 2024.
Paycom, huh? All right.
That's the one.
New one to me.
Yep. Well, remember a couple of ones I brought up? You've been like, huh.
Yeah, except Live Nation. Screw you and your Live Nation.
Hey, Live Nation's done very well, whether you like it or
not. They have not done that well, actually, by the way.
I'm telling you, from where we bought it back in 17, still up very, very high.
Yeah, well, if 17, yeah, but basically from 2021 on, it's done bupkis. Nothing.
Okay, but I'm not losing.
I don't care. It's not about the trade, Larry. It's just my disdain for Live Nation and Ticketmaster. I have nothing but scorn for them.
Right. So guys, if you're interested in learning more about this longer term investment process, because here's the last thing I will say, because I know we're wrapping up, that if it turns out to be a bad year, and all of a sudden we do see what everyone's kind of worrying about, which stocks are you going to consider wanting to buy? Because when we get a crash, I equate it to Lake Mead. All of a sudden, all the crap in the bottom of the ocean is going to appear. And which stocks really deserve to be at the bottom and which stocks become bargains because the stock is broken, not the company. And that's where someone in the know will get in and buy those stocks. And imagine had you done that back in 2009. So I've been waiting 14 years, Merlin, for the big payoff. But you can be doing these smaller versions of this year over year. And notice we've had at least 3 to 5 a year that have played out, and most of them have done pretty well. So they're going to be losers. I'm not going to say there never will be, but right now I think overall it's at 77% winning percentage of all the stuff we've done since 2015 when we started off with NVIDIA. And I want to say the overall portfolio right now is up 226%.
Nice.
So
very nice.
So investing is definitely things that people want to consider. Okay. And what I would say to people, a lot of people will throw out these stocks. Get educated, learn how to do this. Then you can go in anytime you want and you can do the analysis and you'll be able to see based on the class structure that you have a worksheet that will tell you what the price of that stock should be trading at. And it's just following Ben Graham and Buffett's philosophy.
Larry Buffett Jacobson.
Hey,
the guest today.
How can you fault the guy, right?
That's right. I mean, you can't. Larry, what's your teaching schedule look like? Just so I know we have some people here who might be new, some who are Online Trading Academy veterans, but what's your teaching schedule look like? Where can they find you?
Most of the time, I'm in every week. I'm doing the focus class for Trading Weekly Options. We had a really great year. We had a lot of positive trades this year, a lot of great lessons. So everyone can get to me once a week. Every Saturday, we do a session. And I continue to do that into the new year. I will be teaching options in Irvine, but I know it's probably going to be closed out there. It's probably late end of January, and then I'm just going to be in the studio, what I call my studio laboratory, continuing to innovate. So you're going to see a lot of new things in OTA trade in the next couple of months. Todd and I have been really joined at the hip and trying our best to keep adding value for the students and giving them that opportunity to use the tools to help them be more successful.
That's the key. All right, Larry. Well, hey, thank you very much. I appreciate you coming on today. Like your forecast for 2024, you're on the list. Your bearishness is duly noted, although it's not that bearish. It's slightly unchanged. A little bit down. 4% is no big deal. That's called a Thursday for the S&P, so no big deal.
Well, again, the issue becomes: are we going to just see price go sideways for a bit? Will it drop? There needs to be the catalyst. And what I've determined and found is once that catalyst appears, okay, that's when you got to be really concerned. And we saw that even in 2022, there was a moment, and then that's where it really started to tear. The big question is, what do we not know that is going to uncover itself? And, we still are with Silicon Valley Bank. I mean, there's still a lot of stuff out there, Merlin, we don't know that's going to avail itself.
Yeah.
And the question is, how dismal will it be like it was in 2008? And what will the reaction to the market be?
Yeah.
So I'm not a doomsday person. I'm just going to trade what I see and be able to take advantage of it when we can.
Awesome. Appreciate that, Larry. Well, hey, cheers to you. Thank you. Hope you have a fantastic weekend. Thanks for coming on, and I'll look forward to having you back on soon, my friend. Take care.
No problem. Guys, Happy New Year. Have a great rest of your weekend.
All right, so that was Larry Jacobson with Trading Academy. If you want more information, you can visit tradingacademy.com to get those details there. And that will do it for our guest for today. Let me go in real quick. I've got only a few minutes left here, and I want to make sure I get to the markets overall, just kind of what they did. Tom says, Ticketmaster sells tickets for what fish heads are willing to overpay. Your fault. It's not fish heads. It's Taylor Swifties. It's Rolling Stones fans. It's they know. See, here's the thing. Fish says our tickets are worth $700 for a 4-day pass. That's what they should sell for. But Ticketmaster knows that they're going to get scalped, and they don't raise their prices, but they sell a whole bunch to scalpers. That's my argument, that they have connections with ticket vendors who buy blocks of tickets before they go on sale, because those ticket vendors are scalper a-holes that know that there are fans like myself who are diehard fans and will pretty much do everything to see this show. But some of you might be Rolling Stones fans. Taylor Swift tickets are like $15,000, but that's for the best seats in the house. No one needs those ones. So yeah, it's really Ticketmaster's business model that needs to be reevaluated. What they should do is they should make it. I actually had this idea. You guys let me know if this is a good one. Actually, I know it's a good one, so I don't need to ask. It's a rhetorical question. But what I was thinking was all tickets should be done as an NFT, a non-fungible token. And you could write in the code of that NFT that it cannot be sold for more than what the value of the ticket is. So if the band says tickets should be $100, if that ticket gets resold on the open market, it cannot sell for more than $100. It's just locked into the NFT. That would make it a different world. And right now, you could easily have that done over Ticketmaster, but because they're a for-profit company working in the care of their shareholders, they will rob people blind. It's terrible. What is Ticketmaster trade under? It's LYV, Live Nation. Live Nation. Okay, let me go through this real quick here. I don't want to do an hour show. I've told you I don't want to do hour shows anymore, and here we are at another hour show. Worst performer of the day was Bitcoin. Again, I still am not worried. I do believe we are still trending up. I think that next Wednesday, by the end of January, we will have a spot Bitcoin ETF. That's my prediction. Of course, I thought it was going to happen in August. I thought it was going to happen by the end of the year. So you guys, at some point, I'll be right, and I'll pull a side and claim, look how great I was. I made this call. But we will get a Bitcoin ETF here soon. But the final deadline for the ARC21 fund is next Wednesday, January 10th, followed by BlackRock's on the 15th, and 6 others that are happening that week. Let me go up that ladder here. Russell still struggling, didn't get its feet underneath it, although it recouped a lot of its losses today. It was still down 0.34% for the Russell. Again, I still think you're going to head back down to this 1887 mark, which is considerably lower than the 1966 we're at right now. Dollar index slightly up, but what was, I guess, the noteworthy part for the dollar was how volatile it was today. Look at those long topping and bottoming tails in the dollar index. Very volatile, crazy swings. Ultimately, remaining unchanged. Didn't really do much. So End of the day, non-story. NASDAQ was slightly up today. Again, it has the same similar picture. It's a doji, open and closed right around the same price, long tail, long bottoming and topping tails. All in all, technically, that's hesitation, which is good for anybody who's bullish on this one. Typically hesitates for a little second here and then potentially rally back up. But right now, it's kind of a holding pattern for the NASDAQ. S&P, similar picture. I've got that lower demand zone mapped out, which goes all the way down to 1575 is the logical point for me anyway. But that's considerably far away from current levels. Gold, unchanged as well. Most of these markets just having a lot of intraday volatility, but ending predominantly unchanged. So I'll leave that one there. You had your 10-year bond continuing its surge in yield. There was a trader out there today that it was a huge bet. I forgot what it was. It was like, I can't even remember the numbers, but he bought, like $50,000 worth of 10-year bond options expiring at the 420 mark. And if it got there, he would have made like $100 million or something crazy. But didn't get there. That guy lost his money. You're not seeing the chart, Chia? You got to refresh because I am showing the chart right now. That I am sure of. So just hit refresh, Chia. And then finally, crude oil back up another 2.24% to 73.81. I am keeping that line on the screen here, which is at $80.82, which is the origin of this sell-off that happened back on November 7th. That, to me, is my target for this to rally back up. And if it does get back up here, inflation discussion will be back on the table. Next week, let's see. I was going to show you your economic calendar and your earnings calendar. You've got nothing going on Monday. I think, if I'm not mistaken, on Monday you have Helen of Troy. Not that big a deal. It's really all about next Friday, but we'll talk about that next week. The calendar, I had it up here, but I'm trying to remember. Todd Davis will be on Monday. We're going to have Todd Davis on Monday. Jeffrey Hirsch from Trader's Almanac will be on Tuesday. Jeff Manson will be on Wednesday. And, I forgot my Thursday. Or Corey Lane will be on Thursday. So that's our guest schedule for the week. I should just make a graphic that shows all the guests coming up. But that's our guest schedule for next week. There's really nothing on the earnings on Monday, nothing on the economic calendar on Monday, so I wouldn't worry about any of that stuff. So that said, I think I'm getting out of here under an hour. How many minutes? I have 2 minutes left. Perfect. All right, that's going to do it for me, everybody. Hope you have a fantastic weekend. Are those approval dates final dates? I thought today was the SEC was to announce ARK. So ARK's final date, the final date is January 10th, next Wednesday. So the other ETFs, and I'll bring up a graphic maybe on Monday or sometime this week to show that, but the other 6 or 7, they are not the final deadline. It's like the third one, and then there's another one that happens, I believe in March is the final deadline for those ones. But it would not be surprising to me to see that approval happen, and then next week we get one, and then the week after that maybe we get several of them done, because they wouldn't just allow one at one time. All right, so that's going to do it for me, everybody. Thank you so much. Cheers. Yeah, hit that like button if you like today's show. If you have comments, questions, feedback, things you want me to discuss, go to TraderMerlin@gmail.com. Send me an email there, and you can find the list of guests on my TraderMerlin.com webpage, which I don't do much uptake on, but it's there. So thank you guys so much. Have a fantastic weekend. I will see you guys on Monday. Take care.